Hi everyone, let's get started. What if I told you a billion-dollar investment company can report income without actually collecting the money, and investors can still celebrate this as if it's real cash? Because in the world of business development companies, or BDCs, there's a type of income that looks like profit, but it behaves like a ghost. It's called PIK interest. And today, we're going to expose it using one of the biggest BDCs on earth, Aris Capital, ticker symbol ARCC. So on our screen, we see that we have the SEC.gov Edgar website, and this website is completely free to use. And this is where companies report their information to the federal government and the SEC. And as we can see here, I've got Aris Capital listed in the company name and the ticker ARCC. And down below, it shows a series of different types of reports, and the latest of which here, the 10Q, or the quarterly report from 4/28 of 2026. This is reporting the first quarter of 2026 to the end date of 3/31 in 2026. Now, if you've ever looked at a 10Q and thought, why does this feel like it's written in an alien language? You're not alone. In fact, most investors don't realize they're reading a financial statement that can actually legally count income that never showed up in actual cash. And here's the craziest part. The ARCC's latest 10Q actually reveals the truth. They really do a very good job of reporting, I have to say, and it's in plain sight, but only if you know where to look and how to take a look at this. So in the next few minutes, I'm going to show you exactly what PIK interest is, why it matters, and why it can completely change how safe you think that a dividend is. Quick disclosure, this is not investment advice. We do this and create this content for entertainment and educational purposes only. Before making any investment decisions, it's always advised that you speak to a licensed investment advisor. So welcome back to the channel where we break down private credit, BDCs, and income investing like a forensic investigation. No hype, no buzzwords, just the real mechanics of how these companies actually make money and how they can sometimes lose it as well. And so today's case file is ARC's latest 10Q report. Now let's explain PIK interest in the simplest way possible. Imagine you loan your friend $100, and every month he owes you 10% interest, or $10 in interest. Now normally he pays you $10 in cash, but one day he says, I don't really have the cash, but don't worry, I'll still pay you. So instead of giving you the money, he writes an IOU and tacks it onto the balance of the loan. So now I owe you $110 is what he says. That $10 you did not receive, but is still counted as income, is PIK interest. In other words, PIK interest is when the borrower pays interest by increasing the loan balance, not by sending cash. So the BDC gets richer on paper, but not in reality. And so PIK interest makes a company's income statement look stronger even if the borrower may be having some troubles or struggling a bit, because ARC can legally report we earned interest income even if the borrower didn't pay a single dollar. And that's why PIK is one of the most misunderstood numbers in all of private credit. Now here's where investors get lost. A 10Q isn't written for normal people. It's written for compliance. It's written for auditors. It's written for regulators. So when you open it, you're not reading something designed to answer how much cash did they actually collect. You're reading something designed to answer how much income did they earn under the accounting rules. And the accounting rules say if the interest is owed, even if it's unpaid, it can still be counted as income, which is why some BDCs can show huge income while their borrowers are quietly struggling or having a hard time behind the scenes. And that's why people think you need to be a CPA to understand it, because most BDCs will have the PIK interest inside one line, interest income. No breakdown, no clarity, no warning label, just one big number. But ARC is different. I really have to say they do a good job. And ARC doesn't hide it either. ARC actually shows you its PIK or its PIK right there on the income statement, which means we can calculate it in seconds. And what we find might surprise you. So let's take a look at this breakdown. And so let's open ARC's consolidated statement of operations for the 3 months ended March 31st, 2026. Here's the key section, investment income. And ARC breaks this into 3 categories, non-controlled investments, affiliate investments, and controlled affiliate investments. But what matters is this, ARC separates interest into 2 buckets, cash interest and PIK interest. So let's read it. Interest income, excluding PIK or PIK, PIK interest income. Here's what ARC reported. Non-controlled, non-affiliate, PIK interest income of $45 million. Affiliate PIK interest income at $4 million. And right here, controlled affiliate PIK interest income at $3 million. Now we add them, 45 plus 4 plus 3, that equals $52 million. So the total PIK interest income equals $52 million. So ARC booked $52 million of interest income that did not come in as cash. And that's only half the story, because ARC also has something even stranger. PIK dividends. Yes, dividends that aren't paid in cash either. This is where things get really interesting, because when dividends are PIK, you're not getting paid, you're getting promised. PIK dividend income of $64 million is what ARC reports. So now we combine PIK interest of $52 million, the PIK interest here of $64 million, and that equals $116 million. So total PIK income equals $116 million, meaning ARC earned $116 million this quarter without collecting it in cash. Now let's compare that to ARC's total investment income. ARC reported a total investment income of $763 million. So how much of ARC's income was PIK? Well, we divide 116 by 763, and it's about 15%. So the PIK percent of total income equals 15%. That means about 15% of ARC's reported investment income was non-cash. It existed on paper, but not in the bank. Now, to be fair, PIK isn't automatically bad. Sometimes it's structured into a deal intentionally. For example, a company may be growing fast and reinvesting cash into expansion. So it negotiates a PIK component temporarily. That can be normal. But PIK becomes dangerous when it increases because borrowers can't pay, because then the PIK or the PIK interest is no longer a feature, it's a symptom of financial stress. And the reason investors care is because ARC pays dividends in cash. So if more income becomes non-cash, the dividend can become more dependent on new borrowing, new deals, portfolio sales, or accounting income that hasn't been collected yet. And that's when BDC investors start getting a little bit nervous. Dividends require cash, and PIK income is not cash. And this is where people get tricked, because they look at the income statement and say, ARC made $763 million in investment income. But that's not the full truth. A big piece of that income was basically an IOU. It was money that ARC hopes to collect later, which is why PIK is one of the best early warning indicators in private credit. Here's the big takeaway. If you're analyzing a BDC, you cannot just look at the net investment income. You have to ask how much of this income was actually collected in cash, because PIK can make a BDC look stronger right before things start to have some trouble. Now, in ARC's case, 15% is not necessarily catastrophic, but it's a number that you might want to monitor, because if it rises to 20, 25, or 30%, you're not looking at interest income anymore. It could also drop as well. So That's why it's good to keep an eye on this and kind of monitor a trend over time. You're looking for distress. You're looking at borrowers who can't pay and a BDC that is basically making up IOUs. So the next time someone tells you this BDC's dividend is safe because the income covers it, you should ask one question. How much of that income is real cash and how much of it is payment in kind, which is the PIK? Because cash pays you dividends. Paper income does not. And that's why PIK interest is one of the most important numbers in BDC investing and one of the easiest ways to catch problems early, before the market does. If you want, I could do this exact breakdown for every major BDC and build a PIK leaderboard showing which companies are the cleanest and which ones are quietly filing their income statements with IOUs. If this sounds useful, hit the like button, subscribe, and comment below. I want to know what you guys think so I know what I can create and what I can research and bring back to my viewers. And so leave a comment, because this is the type of stuff that Wall Street understands, but most retail investors never even see until it's too late.